Hey, welcome back, and thank you so much for joining me in today's video. I'm excited to share this video because this is an update from Redfin just posted yesterday at the time of filming this video. It says here home buyers are not reacting to lower mortgage rates, with pending home sales posting their biggest year-over-year decrease in about 9 months. So a measure of contracts being signed between buyers and sellers of existing houses, in other words, excluding brand new home construction, decreasing to a 9-month low. Based on a new report from Redfin. However, what they're using here is looking at rates according to Freddie Mac posted 1 week ago, which I'll share with you guys here in a little bit, because rates decreased greatly this week, which was the week of basically the last week of July. Anyways, it says the median U.S. monthly housing payment was just under $2,700 per month during the 4 weeks ended July 28th. That's the lowest level since March. They basically look at asking prices on a national level for houses for sale and also look at weekly mortgage rates according to Freddie Mac, but they're using weekly rates from 1 week ago, and rates have decreased greatly ever since then. I'll share that with you guys in a little bit. So housing payments are declining because mortgage rates and sales prices are falling. The weekly average mortgage rate is at 6.78%, down from May's 5-month high at 7.22%. So back in May, we're at 7.2%, and now we're actually below 7% right now. In fact, the rate they're quoting here, which is the rate they're using to get this number, their monthly housing payment, is this right here from Freddie Mac, posted last week on July 25th. Back then, the average rate was at 6.78%. It says here rates essentially remain flat from last week. However, looking at their new update posted on August 1st, they're showing here that the average 30-year fixed rate was at 6.73%, the lowest level since February this year. However, though, according to the Mortgage News Daily as of Friday, look at this, daily rates for people with fantastic credit, the average rate nationwide 6.40%. You can get an FHA and VA loans at around 6.1%. Looking at rates 1 year ago, we were at 7.13%. So rates have decreased by about 73 basis points or 0.73 percentage points in about 1 year. Coincidentally, rates have decreased by about that same percentage, down by about 73 basis points compared to 1 month ago as well, when back then you were looking at average rate also at 7.13%. So at 6.40%, this is actually the lowest reading we've had going all the way back. Let me actually zoom back over the past 5 years. This is the lowest reading going back to mid-April last year. So basically we're at nearly a 1.5 year low regarding rates right now. So going back to Redfin's report here, what I'm actually really curious about is that when rates have fallen to about 6.4%, is that going to cause home buyers to get off the sidelines because your purchasing power just increased? And of course, your housing payment or your future housing payment would decrease as well. So we'll have to see what happens, because this report just posted yesterday is not accounting for the fact that rates decrease another 40 basis points from Friday. In any case, despite housing affordability improving, pending home sales are down by 5.7% year over year, the biggest decline in about 9 months on a national level. Of course, every housing market's different. And mortgage purchase applications are down by about 14% as well. This is based on a report that's posted every Wednesday from the MBA, or the Mortgage Bankers Association, and that figure has been down by double digits for quite some time from 1 year ago as well. In any case, the decrease in pending home sales and application numbers is largely because even though it's more affordable to buy a house right now than it was this spring, prices and housing payments are still very close to all-time record highs. Another reason for dwindling sales is a lack of desirable listings. Please leave me a comment below with your thoughts regarding this. I get a lot of comments saying that, yeah, there's a lot of houses for sale, but there are houses that need a lot of work and they're just overpriced. So please leave me a comment below what you're seeing in your neck of the woods. So new listings are up by 4% year over year. So we have approximately 4% more houses for sale nationwide right now compared to 1 year ago, but they're losing momentum. I've been talking about this for about 2 months now, because we've been seeing single-digit increases of the number of new listings. In other words, new houses being listed for sale only rising by single digits, whereas before that, we saw double-digit increases on a year-over-year basis. That's based on data from Realtor.com. Redfin's also reporting this as well because new listings only rose by 4% year-over-year. That's the smallest year-over-year increase since November last year. All right, let's change gears here a little bit and talk about some leading indications of home buying demand. This is basically an early snapshot looking at what could potentially happen to our housing market in the next couple of months, given this activity levels. So we already talked about rates. Let's talk about application numbers. That decreased by 2% compared to 1 week ago. This, by the way, is seasonally adjusted. It's down by 14% year over year as well from the MBA. Meanwhile, Redfin's Home Buyer Demand Index, which is a measure of tours and other home buying services from their agents, down 14% year over year as well, and unchanged compared to 1 month ago. Touring activity. These are people who are agents who are showing houses to their clients. That increased by 16% compared to the start this year. At this time last year, we were up by 10% compared to the start last year. Meanwhile, people searching for homes for sale on Google increased by 4% from 1 month ago, but down a whopping 19% from the same time frame in 2023. All right, let's change gears here again and talk about some key housing data. And this is for the 4 weeks ended July 28th. They basically use a 4-week rolling average. So this basically encompasses the entire month of July, more or less. They look at 400 plus US metro areas, and Redfin's weekly housing market data goes back to 2015, and their data is subject to revision. So let's have a look at the median sale price, $392,563, up by 4.1% year over year. And that's down by about $4,000 from the all-time record high that was set during the 4 weeks ended July 7th. Now here's a snapshot looking at the rate of right now, the median sale price. That has been decreasing for about 3 weeks now, which is seasonal because home prices tend to peak in the late summer months. As you can see, it happened there in more or less June of 2023. Also the same time frame, it happened there around June of 2022. And also in 2023, it peaked around June and July as well. Whereas in 2021, a complete anomaly because we had all-time record lows for mortgage rates back in January of 2021. I believe it was around 2.7%. And then rates got very close to reaching a new record low back in August of 2021, where actually when I refinanced my mortgage. And back then, the average rate, I believe, was around 2.75%. So because rates decreased to very close to all-time record lows yet again in August, that's why we saw this very unusual uptick in home prices for the remainder of the year. Very, very unusual. So it's normal to see home prices decrease this time of the year. And they're also up by about 4% from 2023. At this time last year, we were only up by 3%. 2022, 8%. Look at this though, 2021 up by a whopping 18% year over year. Absolutely insane, not sustainable to say the least. It's more normal to see home prices increase in the range of 3 to 5%, of course, not over 15%. Looking at your median monthly mortgage payment, $2,667 per month, and that's at the rate at 6.78%. But again, that's from Freddie Mac. That was posted on yesterday, which was August 1st. But I believe their weekly survey basically looks at lenders who actually answered their survey earlier in the week when rates were much higher than they are today. That's why they have a rate much higher than the daily rate that we're looking at on Friday. Anyways, that's an increase of 4% year over year, the lowest reading since March, but only $168 per month below the all-time record highs that was set just a few months ago. All right, let's have a look at pending home sales, new listings, a measure of people listing their homes for sale, and active listings, which is more or less housing inventory, the amount of houses currently for sale, at least for the 4 weeks ended July 28th. So pending home sales fell by nearly 6%, the biggest decrease in nearly 9 months. Again, very interesting, a big decrease, but I'm wondering if this will change in the coming months given the fact that rates decreased so much this week. Time will tell. Meanwhile, new listings rose by 4%, but that was the smallest increase in nearly 9 months. And also active listings, housing inventory, rose by nearly 19%, but that also was the smallest increase in about 3 months. So if you guys want to see a housing market crash, you would want to see pending sales basically plummeting. And we also want to see new listings and or active listings absolutely skyrocketing. Right now we're seeing on the demand side decreasing big time on a national level. Of course, every housing market's different, but housing demand decreasing big time. But we're not seeing inventory skyrocket. In fact, the biggest or the smallest increase in about 3 months. So let's have a look at pending home sales going back to 2021 from Redfin's data center. It's down 5.7%. There's approximately 80,000 new pending home sales over the past 1 month. Look at 2021 though. Back at this time in 2021, right about there, 116,000 pending sales. Now there's only 80,000. So big decrease, at least a 3-year low during the same time frame. So that's the demand side. Let's have a look at the supply side. New supply hitting the market up by only 4% year over year. But this is basically moving in the opposite direction. Again, if you guys want to see a crash, we want to see basically moving in this direction. Going back to basically April, we were up by 14% year over year and basically in double digits for basically only really April based on data from Redfin here, except for actually February, basically all the way until we hit the end of March. We're in double digits for new listings. Now it's only up by 4%. It's also much lower than 2022 as well as 2021. In 2022 at this time, approaching 110,000 new listings. Now we're only at about 91,000. So pending home sales decreasing, new listings rising. Let's have a look at active listings. Yeah, and like I've been sharing with you guys for the past several weeks now, according to data from Redfin here, they're showing that active listings or housing inventory basically peaked in June, which is unseasonal. We tend to see inventory peak in the late summer months and not in the early summer months. And it's basically moving in the opposite direction here. If you guys want to see home prices absolutely tank, going down ever since really July this year. Having said that, we are still at a 3-year high or at least a 3-year high for the same time frame. But it's going to be interesting though, because over the past, in the next couple of weeks here, we could get into a scenario in which inventory dips below 2022, which is the black line right here. Going back to Redfin's report, let's talk about the month supply. We're at 3.8 months, an increase of 0.8 percentage points from 1 year ago. It says here a 4 to 5 month supply is considered balanced, with a lower number indicating sellers' market conditions. In other words, a very low number means that sellers have an advantage over home buyers. A high number means that buyers have an advantage over home buyers. And in general, a seller's market means that more or less that home prices are rising. A buyer's market can imply that home prices are decreasing because sellers are competing against each other. So right now the month supply is at 3.8 months. This means at the current sales pace, all houses listed for sale right now would be sold in about 3.8 months. Having said that, take a look at this. 3.8 months is easily at least a 3-year high right now. I mean, look at 21. Back then, the month supply was just over 2 months. Now it's at 3.8 months. It is seasonal to see the month supply start to increase in July, as you can see virtually every year, except for 21, of course, due to the near record low rates that we saw back in August that year. But in 22 and 23, the month supply started to increase around June and July. Same thing this year, but we're much higher compared to last year this time. Last year's time, the month supply was only at 3 months. Now it's at 3.8 months. To provide some context regarding this figure at 3.8 months, here is some historical trends. Here is a data poll I pulled from the National Association of Realtors website. several years ago. Anyways, back in July of 2019, the month supply was at 4.2 months. July 2018, 4.3 months. We had a 4.2 month supply back in 2017, and July of 2016, 4.7 months. So the average July from 2016 through 2019 was at 4.4 months. So to provide some context here, or just say big picture, we're at least a 3-year high. I mean, easily right now, but we're still well below historical norms looking at pre-COVID levels. Going back to Redfin's report, let's talk about the changes in the 50 most populous metros regarding home prices. So Detroit, Michigan led the nation, giant increase up by 17.2% year over year regarding their median sale price. After that, we have New Brunswick, New Jersey up by 15%, Providence, Rhode Island 13.6%, Milwaukee, Wisconsin 13%, and West Palm Beach, Florida, also up by nearly 13%. There's only 2 metros that were down year over year. That's Austin, Texas, down by 2.3%, and Dallas barely squeaking out a decrease, down by 0.4%. In regards to pending home sales, there's only 7 metros that posted gains from 12 months ago. Those metros were San Francisco, Newark, New Jersey, Los Angeles, San Jose, Boston, Providence, Rhode Island, and Cincinnati, Ohio. In contrast, 33 or 43 of the 50 biggest metros posted decreases. Houston, Texas, I mean, that's a giant decrease, down 30.5%. That could be due to the fact they had a hurricane back in July. If Travis Spencer of Real Estate Mindset is watching today's video, then please leave us a comment below regarding what's happening in Houston, Texas. I'm guessing this decline is due to the hurricane that was hit in that area. Anyways, we have Atlanta, Georgia at the number 2 spot. Then we have Minneapolis, Fort Lauderdale, Florida, and West Palm Beach, Florida, down by 13%. In regards to new listings, out of the 50 most populous metros, 13 are down. The biggest declines, Atlanta, Georgia, Houston, Warren, Michigan, Portland, Oregon, and Chicago, Illinois. In contrast, the biggest increases of the number of newly listed houses, Las Vegas, Nevada, up by 17.5%, San Jose, California, Jacksonville, Florida, Miami, Florida, and San Diego, rounding out the top 5. In regards to how fast or how slow houses are selling right now, on average, they're selling in about 33 days. So you list your home for sale, approximately 33 days later, you accept an offer from home buyer. That's an increase of about 5 days compared to 1 year ago. So houses taking about 5 days longer from the same time frame in 2023. And by the way, at 33 days, this is at least a 3-year high as well. So for example, low point back in 2021, houses on average were selling in about 23 days. Now they're selling about 10 days longer right now. Now here's a new all-time record high. This is the share of price reductions according to Redfin, 6.8%, surpassing the previous record high. I believe it was set the previous week, and also back in November of 2022, we're at approximately 6.7%. So the share of price drops right now is at a new high, a new record high for weekly data goes back to the year 2015. What's interesting about this chart right here, basically reaching all-time record highs, which it says right here, highest level on record at 6.8%. Now looking at another resource I love to use is altosresearch.com. According to them, the share price drops right now is at basically 39%. This is the highest levels in about or over 5 years for the same time frame, but we're still below the peak that was set back in 2022, when back in November, the share was at 43%. Now we're at 39%. Now, if you guys know why the share price drops is so much lower on Redfin's website, please leave me a comment below. Lastly, looking at Redfin's average sale price to final list price ratio, that's at 99.4%, which means of the houses that did sell over the previous 4 weeks, they sold for 0.6 percentage points less than the seller's final list price. This is a 3-year low during the same time frame, at least. During the peak of 21, back then, houses on average were selling very close to 2 percentage points over the seller's final list price. Now they're selling slightly below asking price on average. With that said, please leave me a comment below with what you're seeing in your neck of the woods. I know we get a lot of subscribers and viewers all over the US and also across the world as well. Absolutely mind-blowing. Anyways, I would love to hear from you guys. What are you guys seeing in your neck of the woods? Because of course, the national trends I'm sharing in today's video may not pertain to your neck of the woods. It doesn't pertain to my neck of the woods in the Sacramento area, where it's still a competitive market, not nearly as competitive as 2022, but holding up fairly well to the fact we have far fewer homes for sale here in Sacramento region than we had back in 2019, whereas other areas such as in Texas, Florida, Tennessee, and very close to being in Idaho here as well, they have more existing houses for sale this June, or actually this July, compared to July of 2019. And areas that have more inventory compared to pre-COVID level are experiencing decreases in home prices or home price growth very, very slow. Other areas such as the Northeast that are experiencing big decreases of inventory from 2019 are still experiencing big increases in home prices there. In any case, if you guys got any value out of today's video, then please hit the like button. Also, consider subscribing as well. Help us reach 100,000 subscribers by the end of August. Cross your fingers. We'll stay tuned for that. Have an amazing day. Thank you so much for watching today's video. So we'll see you in the next one.